If you care about your portfolio and your money as I do yours, as well as mine, you definitely want to listen up. We just got a signal in the bond market that we need to discuss here. Remember, as we always say on this channel, the bond market is usually better at predicting crashes and recessions than the stock market, and it is a lot bigger than the stock market. Also, we will discuss everything earnings. We've already had a round of earnings from the major banks. We also had the Netflix disaster, which I discussed here. And we also had Tesla reporting earnings. We still have Facebook, aka Meta, Apple, Microsoft, Amazon coming up as well. These are the biggest companies in the world. We will also go over the latest comments by Jerome Powell. He was at an IMF event this week, and he briefly discussed inflation as well as rates, as you can expect. And we will go over some very important comments from San Francisco Fed President Daly, what she said about a possible recession. The first Fed president, Fed member to discuss a recession that on record as far as I'm concerned. So, all right, what is the bond market signaling? Well, the real bond yield on the 10-year Treasury bond turned positive on Tuesday for the first time since the beginning of the pandemic. Why is this bad news? And what is the real 10-year Treasury bond yield? Okay, so we have the actual 10-year Treasury bond yield, which is sitting at near 3%, continuing to climb today, which is part of the reason why stocks continue to be battered, even though we had some great earnings on Tesla. We'll get into earnings in a second. But the real yield is basically the 10-year Treasury yield that is adjusted for inflation. So the yield that we have currently that is now almost at 3% is not adjusted for inflation. The real yield, however, is adjusted for inflation and is seen by many economists as a more advanced and accurate reading of what is to come for the economy. So why are the real yields important? See, traditionally, stocks and bonds are competing asset classes, meaning when we have a heavy influx of activity in the bond market, that usually takes money away from the stock market, right? That is money that would otherwise be invested in the stock market. And when real yields climb, that means that now bonds can actually be seen as a potential hedge against inflation. See, before real yields, when they are negative, then investors are still not confident in the bond's ability to beat inflation. However, when real yields adjusted for inflation, are now positive, that means you can potentially get a positive return as long as inflation doesn't continue to climb. So if inflation has, as a matter of fact, peaked, as a lot of banks and analysts are saying, then real bond yields can actually look attractive for the typical investor who's just looking for a safe investment in a passive asset class that offers fixed returns. And this is how this ties into earnings. If growth companies trading at high valuations like Netflix, if they continue to miss earnings or lower guidance, then that is going to put more downward pressure on the stock market and make bonds, which are now returning positive real yields, make them look more attractive, meaning we will likely see more money going into bonds, less money going into stocks. That is why I said this earnings season is going to be the most important earnings season for 2022 and beyond, because this is the first earnings season that will showcase how companies are doing in a new environment, in an environment post-COVID, in an environment with high inflation, high interest rates, and supply chain headwinds. And even as mega cap companies like Tesla broke records, reported record earnings, beating all top line and bottom line numbers, even though the stock is up, it still is not enough to keep the stock there. As of the time of this recording, Tesla has lost 8% of its gains intraday, and this is due to these pressures that I'm discussing. Tesla is one company. We still have Apple, Microsoft, Amazon, Facebook, as well as some of the other large cap and mid cap companies. I'm just talking about the ones that actually control the indices. And speaking of Tesla, I would relish the opportunity to buy shares or sell a cash secured put here, especially if we get some more downward movement depending on what happens in the market. Now for Tesla, we bought a strangle that we closed for 65% this morning, thankfully before that downturn. We also had another call spread at the 1250, 1300 strikes that we closed for 60% this morning as well. And like I said, I will definitely be looking to sell a cash secured put on Tesla, which I've been doing for 2.5 years now. I haven't been assigned once. And if you want access to all of our trades, you get the options day trade watch list every day. You get access to all of the bots, the option sweeps, huge options orders, dark pool orders, etc. We do have a beginner section for those of you who are still starting out. There are literally no stupid questions here. You can ask the coaches any question you want and you will get it answered. Sign up. Link is in the description below. It is a great value. We have thousands of traders on board helping each other out all day, every day. It's really a beautiful thing. Okay, and lastly, Jerome Powell's comments from today. Really nothing out of the ordinary, just said that we have to tame inflation, 50 basis point hike possible for May. This, in my view, is already priced in. The Fed Rate Watch tool already shows that a 50 basis point hike is the likely scenario, with almost 98% of Fed members projecting that. However, you do see the Fed acting very craftily here. Now, I don't know how much the Fed members and Fed presidents speak independently or whether they are given instructions on what to say. But the San Francisco Fed president, Mary Daly, yesterday, she acknowledged that we could see a very shallow recession in the U.S. economy. As far as I'm concerned, and as far as I know, this is the first time recently that a Fed member or a Fed president has talked about the economy potentially going into a recession. So I don't know, again, if they are independent or not, or if they are given instructions in order to try and soften the blow by telegraphing worst case scenarios so that the market actually doesn't go into panic mode if and when these do happen in the future. So in summary, there are a ton of moving pieces, right? We have bonds. If we see an influx of bond buying and the upcoming earnings on the mega cap stocks that are yet to report earnings are not great, then we could see some more volatility in the stock market, potentially retesting these lows on the SPY at around 415. However, if we get solid earnings from Amazon, Apple, Facebook, Microsoft, then we could actually see the market retest all-time highs. Yes, we could actually see that, especially if these 10-year yields start to come down. Remember, the next FOMC meeting is May 4th. We will definitely be keeping you updated all along the way, and on that day as well, I will likely be doing a live stream that day. Anyway, traders, let me know in the comment section what you think about a potential recession, what you think about Fed President Daly's comments about a recession, what you are currently investing in. I love to hear from all of you. If you want access to our group, sign up. Link is in the description below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.